Welcome back to the Halftime Report. We're going to look at Netflix, downgraded to neutral at JPMorgan. The stock had been hitting all-time highs. Jason and Weiss, you both own it. Jason, I'm going to come over to you. Analysts saying gains harder to come by after the recent run.
Yeah, listen, I mean, they've been hitting on all cylinders, clearly. I mean, the stock's up 32% year to date with all the kind of concerns in the macro coming into the year. I think what's been cool about Netflix is, number one, the optionality, right? So there's trade down. You can go from the top tier to the ad-supported tier, and there's almost a difference of $20, right? So I think that's been a huge winner for them. Obviously, they had a really good quarter, 25% EPS growth, 12% revenue growth. They're no longer talking about the subs or reporting the sub additions. So for me, this is a reasonable call with the run that they've had. There are obviously other streamers. Disney had a pretty solid quarter, and I think folks are kind of looking to them now for some accumulation. But I continue to like this name going forward.
Weiss, you own this one as well.
Yeah, and it's my largest position, which I'm going to cut back at some point because it's just much too big. But look, it's been a safe harbor in the storm that we've seen in the equity market. So while the other tech stocks are trading down, it was actually moving the other way. And that's because, it will do well in a, not as well as it's doing because people are loath to spend money in a recession, but it'll do well in a recession. And it'll also do well in a growth economy. So you typically don't see that. You see more of a double-edged sword. But look, there's no reason. It's not terribly expensive. It's not cheap. But it's a unique asset and a pure asset in terms of streaming.
Maintain your positioning here. This is not the type of stock you get out of. We have a nice recovery intraday from the news earlier in the day of what we don't want to discuss anymore. The Dow is now higher. Spotify is at an all-time high as we're speaking. Microsoft is pushing towards that 468 level, all-time high. Meta's higher. Amazon is higher. This is the type of environment where if you own a stock like Netflix, you stay anchored to that, ride the winning trade.
And to be clear, it will still be a core position, perhaps my largest core position. But, when it dipped, I bought quite a bit. And it's uncomfortably large.
Important note, even with the JPMorgan downgrade, Cowen actually raised their price target on Netflix, going from $11.50 up to $13.25. So also some bullish sentiment when it comes to the name as well.